So I want to start off with the spiral, and we're looking actually at the view here, starting at 2017. So around the 2017 cycle peak. So those big two green dots that you see there on the right, and just I mean I think most of the people understand already the concept of this chart, but just a very quick follow up. So a full rotation in the chart is a period of 4 years. So we started actually in 2009 at that a vertical orange line, and then a full rotation is 4 years. So we go 2009, 10, 11, 12, and the next cycle is 13, 14, 15, 16, and then a quarter rotation 2017. That's where we are now in that chart. And so each ring in the chart is times 10, and that's the price. So we go from $1 to $10 to $100 and so forth. What I did with this chart is I actually color coded the price based on chain data. So based on the short term holder cost basis, that is the average purchase price of short term holders, which has been it's one of those fundamental on chain indicators that does a very good job at kind of indicating where price might go or where there's a support level. The short-term holder cost basis serves as a support level during bull markets and kind of resistance during bear markets. But using the distance of the actual price compared to the short-term holder average purchase price, so the short-term holder cost basis, that gives us that allows us to color code the price information, and so we can actually visually see the difference between bull and bear markets. And so what I want to do is another concept that I added to this chart is actually the Wall Street cheat sheet, because
Yep.
On-chain analysis allows really to look at the psychology of the market that's going on. And so what I try to do, so I also called this the Bitcoin cheat sheet. Actually, my Amsterdam presentation wasn't this as well, but I want to kind of give an update on where we are now. And so we kind of try to identify the different phases that are happening in Bitcoin and where we are now in the cycle. And so everyone has seen this Wall Street cheat sheet, I suppose. And so what I want to do now is, like, we start actually at the euphoria phase there in 2017, where really people feel like they are a genius, and then we're going to spin. And then people think obviously that price is going to keep on going up, but then we get this complacency phase and then the denial phase, and then people start panicking, and then people actually capitulate and they start getting a little more angry, and then they feel like an idiot suddenly, where before they felt like a genius, and then it's kind of slow recovery. We get this enduring phase, and where there's really like a lot of stagnation going on, like with a lot of sucker rallies, and then there is a rally, but people are still in disbelief and doubt. Like, is the halving priced in, for example? Those are these calming feelings, and then we actually get this blue dot that is the halving that is going on. And usually we get a calm phase after the halving, but then the optimism really starts coming. And then we get, like, people start really believing, we get these all-time highs. And often we get, that's followed by an intermission. And then we get like the true trill phase, where they start to, like, telling everyone like, oh, you should buy. And then again, we feel like a genius. And so then we fall back into the same cycle, complacency, denial. We're now in the 2022 bear market. I guess most people that are watching this, they kind of are familiar with the sentiment that was going on there. We make another bottom. And so actually this way of identifying the phases has been spot on since the bottom. We went through this depression kind of phase, and then we really got this stagnation phase with a lot of disbelief recently, where people thought like, no, this is not going anywhere. And then we had this doubt, like, is the halving priced in, or are the ETFs priced in? Right? That was like the common feeling that we've been having for the past few months. And so this is where we are kind of now. So we're now in this phase of doubt. Is the halving priced in? Is the ETF priced in? And I guess we might be a little past now. And that's what I want to get into now, is because we actually had the ETF approval, right at the beginning of the year, and the halving, which is coming up in April of the year, which are marked here in the chart. And so what I think is interesting is that the ETF approval has been such a catalyst, equal in nature to the ones of the halving. And because we were kind of leading up towards that approval, the cycle might have started shifting, or we might have skipped the phase, because we're now the question is, are we still in the doubt phase, or are we already in the optimism phase, right? Because we just made an all-time high.
Okay, firstly, can I just say what a beautiful animation this is? This is some great work. If you're listening to this on the audio, I recommend you hop off, jump to our YouTube and watch this. I think you're visually going to want to see this. And plus, we get double the downloads. So definitely go and check that out. The thing I was coming to is I think we've jumped a phase. I think we're in belief right now.
Yeah, so I think we're still in the optimism phase, but yeah, I agree. So I think we have shifted, and so I want to go into those dynamics a little bit, and we'll see. But indeed, I think the main reason are the ETFs as a catalyst, and so let's go into those dynamics in the next charts. Yeah. So also what I wanted to still say is. That the next cycle peak doesn't have to necessarily fall within in that green circle that you can see here. So that would be the end of 2025. I think it's possible to have a cycle peak earlier due to the catalyst being earlier with the ETFs, and but we could also still stay within the 4-year cycle by perhaps having a double top. So maybe we'll have like a bull run and then a longer than usual intermission, and then we might still make a cycle peak around that same period in the end of 2025. I cannot predict the future, obviously, so I go just by the indicators. But yeah, the 4-year cycle would imply a peak near the end of 2025. So, but perhaps we're kind of shifting a little bit, and the ETFs might have speed up things a little bit.